And you could see you rally up to it, you fail, and it's descending. And right now, in fact, the line goes a little lower because you're missing Friday here. But
Right.
you get back above the zero line, which is in red. That's a first thumbs up. You get above the green line, it's saying, hey, that's it, guys. That was your
Right.
decline. And in price, that's going to occur looking out to, let's say, Tuesday or Wednesday. If you get gold even back up toward 2,900, right now we're just below 2,950, 2,850. So,
Right.
and silver, we're using the May contract now, you get it up about 1% above where it closed Friday. It was about 30, 40 cents. It's going to break out over a similar structure, meaning momentum says, hey, you had your correction. Now, you look at this momentum chart. It's been descending for over a month. Price only recently broke. Price
Right.
was lagged to this decline. And
Right.
it's just the same as going to happen the other way. When momentum breaks out, price will barely be off its low, and it's not even going to realize there's a structure there when you look at
Right.
price chart. But on momentum, you can see a very clear structure. And this,
Let me quote you from the report you put out, I think Thursday. And it's
okay.
about this chart, and it's exactly what you said, but using different terminology. The problem, let's say we want to be bearish here. This is, I think,
Yeah.
pretty important what you said here. The problem with being negative here is that daily momentum's cooling off corrective process is now 3 waves to the downside and
Mhm.
involves 19, now 20 trading
Mhm.
days. Momentum, circled in black, finally closing below the zero line after holding above it on closes for the prior 13 days.
Yeah.
And you'd be ahead today by a few dollars. In sum, this is what MSA terms a benign correction. And if you look at
Yeah.
that from how we look at stuff on GoldFix,
Mhm.
not knowing anything about this is not knowing anything about how you calculate, look at all the time it spends above and look at all the time it spends below. Mostly it's above. And we've
Yeah.
been in a structure using that green dotted line or blue
Mhm.
dotted line on the way down. We've been in a bear structure for 19 days and it just now got below zero.
Yeah,
So I
and
would
it
say,
just now inflicted enough pain where people think, oh my God, it's all over. Gold's
right,
over. In fact, momentum says I'm exhausted.
right,
Okay.
right,
And again, if you uptick and break through the green line, like I said, later in the week, like Tuesday or Wednesday, you get up at 2,900 area, you're breaking out. Okay, period.
right,
Talking. Uh,
right.
so, momentum says something totally opposite. And you said, look at the probes below zero line, they tend to be briefer. Well, this is
Right.
the bullish bias. It's what,
Right.
what it is. I
This
mean,
confirms your intermediate and long-term bias when you look at
yeah, it,
this.
it confirms
Yeah.
that. Yes. So, and it tells me this, yeah, we've been in a daily momentum corrective process for a lot of days here. In fact, price only produced a downturn last handful of days. Momentum
Right.
said, I've already been in it. And so price says, let me join. Too late. Momentum is ready to turn up again.
Yeah.
And we'll see. Mhm.
Uh, I want to share something with everyone here. We're all focused on the information, and obviously we try and couch it. Information for us is an explanation of price action afterwards, right? So take a look at this. Throughout the last 19 days, momentum has made lower highs and lower lows. But the market, for a good portion of that, was making higher highs and higher lows.
For
Kind of
price.
like,
Yeah. Mhm.
right, making new highs, but
Mhm.
on, less volume, less oomph, less
Mhm.
follow through. And all during that time, the press was like gold squeeze, deliveries, repatriation.
Mhm.
We
Mhm.
talked about it too, but
Mhm.
never just never as a reason to buy. The point is momentum, as this indicator shows, was telling you don't get too excited about what you read. Get
Mhm.
more excited about what the price will do a week from now. That's what I say. Anyway,
And
I
it
think
finally did a stinger. In the last few days, price gave him a stinger on the downside. In fact, it was
right.
all only last week. You went from the high to the low last week.
That's
Uh,
right.
I think you made your final high last week on Monday or something. And so now everybody's scared. But momentum says, no, I'm exhausted. All I got
Right.
to do is pause and uptick a bit, and I'm going to blow the structure out, which case you've got yet another drop in gold over the last year, which looked bad, and then suddenly, it's gone. So we'll see the next few days. If they don't beat the hell out of gold, then it's over. This thing's going to wrap up, and I suspect they're not going to beat the hell out of it. I think it probably is going to show some signs of stability and turn.
All right, I want these guys to ask you some questions, but
Go ahead.
they're going to ask you about minors. I'm not, but I want to ask you one equity question because you said something in that interview with Alistair that made me kind of pay attention. And let me find that question I have over here. You listen to how formal this question is. You recently alluded to a kind of structural hell beneath in stocks where you looked beyond Nvidia and Mag 7, referring to financials. What do you see? Now, reason I'm going to put up what I see because you made me kind of look at this and I went, oh, look at that's the XLF plotted against gold. I went, and by the way, we are very big on correlations here, which is not technical, but it's related to technicals. And the point being is that gold's losses were financials gains. I like fiat. I hate gold. I hate fiat. I like gold. But then in the SVB era, it became like, okay, I'm going to like financials again, but I'm going to buy a little gold, almost like gold is the new bond market, which gold used to be the old bond market. So that was me saying, you know what, there's more to this financial stuff that meets, yeah, and that's how we look at it. My question is, how do you look at XLF and what is it about this horrible structure that you see possibly underneath that is giving you pause?
XLF is, for the last couple weeks, has gone up. Okay. It feels very funny to me. Now, BlackRock, by the way, has gone down. They hit a bounce on Friday, but it's a component of XLF. It's within
Right.
20, okay, top 15 or so. And it's the biggest asset manager in the world. Now, I'm not picking on BlackRock because, frankly, you can take any of the top 10 or 20 within XLF, broker-dealers, brokers, banks, insurance companies, et cetera, and they all have vulnerable, what we call quarterly momentum trend structures. When you look at this price chart on XLF, looks great. And what's wrong? You had a 3-week pause and you punched out a new high this week, despite the S&P and the NASDAQ they're down on the month. They're down on the year. In fact, S&P is only up 1% on the year, NASDAQ's down on the year. What's going on with the financials? First off, I think they're being boosted by that T-bond rally. They think, oh boy, lower rates on the long end. The problem is errors have been committed, and that T-bond rally is not good for you. It's a sign of money starting to flow away from the stock market. Okay.
Right.
As it did in 2007, as it did in 2000, T-bonds went up while stocks went down. Okay.
That's right.
So, but it almost feels like somebody's supporting this sector. Pardon me for saying that. I'm not a conspiracy guy. If I were the Fed, this is the sector I'd be defending. They buy ETFs, and I'm not saying they've done it. They did back in the COVID period. They bought ETFs.
ETFs were I want to interrupt you a second. ETFs were not created, but were encouraged because it allowed them to centralize behavior.
No,
back in 1987 and 1990, after the flash crash, they're like, we need more ETFs so we can fix this stuff faster. Yeah, that's right.
But when you look at the price chart here, I suggest that you take this XLF chart and go find an 87 chart of the S&P and look at where it was in August, September. It looked just like this. It looks super. Price was at new high. Oh, it had congested up there. And you see there's like 4 weeks, a month of congestion there. I think this is a weekly, correct? Yeah.
That was actually a monthly.
Oh, this is a monthly in front. Okay.
But I'm going to find your stock chart so you can do your parallel.
No, it doesn't matter. This is shown that, yes, we punched up to a new high here this month, but it's been sold into for 3 months prior. And so it plateaued. Now, why were they selling it? Quite often when you see an acceleration like this in a market where it goes vertical, like a bar of soap, okay?
Right.
And then suddenly you see this distribution zone. It means somebody says, I'm out. I don't want it anymore, okay? But it rarely ever tops that way. You can't top with the crew cut usually. You have to pierce it.
Right.
That's the trap because people say, oh, see, it's a breakout for a whole new leg. Okay, I'm going to make this statement. Now, there's specific momentum numbers that we're watching. In fact, it'll be included in our weekend report on XLF. And they're not far below you, by the way. A couple % below where you are now, you start to come into big momentum trouble. But even the price chart says, look, I broke out over this ceiling. Don't get back below that price ceiling. If you do, I bet it's an abort of a false breakout, and the unwinding process will commence at that point. Because without even taking out the lows you see of the last 4 bars there, the range